Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today I'd just like to go over the kind of base that we're putting in after the drop the other day, which just has us kind of settling into the patterns that we've been discussing for several months here at Alpha Commission. And I just don't want to like zoom in and be too specific for this discussion, but rather kind of zoom out and look to the left, get kind of a big picture view of where we've been. So of course we're here right now, and then this was last summer, and this was 2018. If you've been following my other videos, you probably understand what I think is most probable to come next. I do think that we're probably going to see some type of retest of these lower numbers, and that's based primarily upon the extreme buildup of low volatility, as well as the overall condition of the global macro economy in combination with the challenges that are facing stocks right now. All those things combined together are most likely going to result in a pretty big dip. It doesn't have to be the case. There are specific conditions that I laid out, which, if met, we can avoid that. However, it is most probable that we see downside. And I want to just show you another way of perhaps looking at all of this. And so after doing some thought problems and reviewing one of the videos I made several months ago back in January, I decided that this kind of a setup was probably a good tool for looking at what's happening right now, which is these macro wedges on the larger time frames. Okay, I have the daily on, but you can understand that we're looking at multiple years, so that's why I call it a higher time frame. So this is 2015, and you can see if I'm basically pointed out the big wedges, but we have little wedges all of the time. And I'm not going to go through the process of marking all of those out. What I did want to show you is the big moves, how Bitcoin has been behaving lately. And that means primarily since, pardon me, that means primarily since 2017-ish. So what do we have on the board here? And why am I marking things out this way? This is not the way that you're supposed to create trend lines, right? So of course you can criticize I'm once again breaking the rules and trying to think outside of the box. Well, I really don't consider these blow-off tops to be legitimate price action. I know that most people are taught if you want to make a trend line, you just take a top point and then you kind of like bring it down wherever you want to go, and you can kind of just bring it to the next price action, whatever it touches, and that's your trend. And of course, that's good for spotting breakouts. You can see right here, look at where this thing just fires up if I zoom in. So if you don't know this, this is a pretty handy thing to be learning. But you can see like where it connects at the next price action, you get kind of some explosive action. That's not always guaranteed, but it is quite common, and traders will use that to their advantage. However, that's not what I'm looking for. I'm not looking for breakouts. I'm not looking for breakouts in future price action. I'm looking for the fate of current price action. And so this for me is pretty much useless. And what I want to do is get rid of that blow off top, which is just, a psychological, phenomenon. Whereas the actual price action that we can see in this area is more like this, where there's a very clear trend between these points, right? In fact, this is the support that the blow off top is sitting on. So it's almost like there's another triangle just sitting on top of this support, which is really just a trend line that's kind of hidden. And of course, these distortions really do help, big players kind of manipulate the market psychology, because you may be measuring from right here, whereas, the big players are probably measuring from something like here. Why? Because they know this is the exuberance of the market. They know this is the stupidity of retail. This is retail trying to go to the moon while the big players are selling their bags, quietly selling their bags, right? So, yeah, what can we derive from this? Well, we can derive a wedge from it because you can also see that there's this base of support, and it's pretty clear. It's pretty clear. I mean, I know I said I wouldn't call diagonal support, but I am primarily a diagonals trader after my EMAs. Basically, I use diagonals to help support concepts that I develop with my EMAs. And so I'm always on the lookout for these type of trends, especially on the macro level, because they do have such significance. And if you're willing to break the rules with me and, let me use this kind of approximation, thinking outside of the box, not just sticking to the rules, and then if we also just kind of visualize this kind of support, then we do see the wedge formation and aha, we break out right at the apex of this wedge. And what does that apex have attached to it? Well, there's this red vertical line. And if I go over to the volatility here, you can see that we had a series of low volatility just building up, building up, building up, and then it finally popped. Okay, that low volatility just popped. And when it popped, it went into this huge, destructive phase that just, tanked Bitcoin. And effectively, you had the best buying opportunities of your life, assuming you didn't buy before then, uh, right here. As opposed to people who, were trying to argue that this was an accumulation wedge because, they're thinking like, oh, hey, Bitcoin's just making this accumulation wedge and we're going to go to the moon, right? Like these are the things, this is how they get you, right? They buy in here and then they sell here and you're left holding the bag. 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 And so you can't make money until way over here, a year or so later, whereas they've already dumped all their coins on you, the big players, and then they've taken advantage of this and they've rebought here. And so what do? They bring it all the way back to where your break even, where, just stupid retail is break even, who didn't have any type of strategy. I shouldn't say stupid, I should just say like inexperienced because definitely I was, one of these type of guys at some point as well. And every once in a while we make mistakes and we end up holding bags, even as experienced traders, right? Or even as moderately experienced traders, let's say. And so, look, what happened here? We met the break-even point for all the people that got trapped in these longs, all the people who got trapped in these like a spot longs and all that things, just holding their bags, and they still couldn't get into profit. Meanwhile, the smart money dumped on them once again because they thought it was going to go to the moon again. These guys are all thinking, who broke even up here, okay, I couldn't afford this, but finally I can get out of my position. We have a little bit of a dip down. I'm going to buy back in. And what does the smart money do next? They dump, oops, they dump it again, right? They dump it again. And so you can see how this process kind of happens and whether or not it was going to be a gentle curve or whether this Corona dump was already built in and maybe it was just going to be kind of a, later on, but it got accelerated. We don't know. We don't know. But rechecking all of these price points is pretty much how markets work in order to, double check all the supply and demand. And so they do double check those zones quite often. Well, because this corresponded to that volatility, then what we would want to see is there something interesting about this? Well, yeah, we had that low volatility build up again right here. And right before it popped, it almost reached maximum low volatility. And what happened is that it went and, reached these highs. It just expanded to these highs. Same thing with this wedge. right? What happened is we entered a period of extremely low volatility, only this time we popped to the upside. Why? Because volatility is direction neutral. There's not a direction on volatility. Volatility is exactly what it sounds like, chaos, right? It's chaos. But there's another aspect to it. If there's low volatility, it means that there is a platform that has been built, which means that anybody with enough resources can push the market much more easily than if there was a volatile situation. So while high volatility, for example, right here, right before the Corona dump, whereas high volatility can do something maybe chaotic, super chaotic. This area of low volatility can be used to manipulate for actual like constructive purposes, either to bring the market down or to pump it up, depending on what your design was. And assuming that the market makers already took all of their profits here, and then they offloaded anything else that they were holding here and got retail stuck in all of these zones, stuck here. And assuming that the smart money bought back in here, got another point to take profit, and then got people stuck in on these, bounces up again, and then they bought in again. Well, it's time to go for another ride, right? This is kind of the journey of the smart money, as opposed to the retail who just FOMOs in here, they FOMO in here, they FOMO in here, they FOMO in here, and they're terrified to buy over here, terrified to buy over here. So are you starting to see why these wedge concepts are very important and why it's important to just like ignore this kind of irrational exuberance of the general mainstream market, the general mainstream retail? Because if you're a market maker, if you're smart money, you're going to see this wedge in your planning, and you're going to be perfectly content to buy in these areas while this wedge is contracting. And then at some point, you're going to reach an apex, and you're already going to have offloaded any of your trades every time you reach this diagonal. And then if the market goes up or down, that may not be in your hands, or maybe you are one of the market makers whose hands it is in. But the world will do whatever the world will do. And if you come back down lower, then you buy back in, right? And if it starts going up, of course, you can always buy back in and continue up also, right? So you don't necessarily have to be buying into your permanent positions right here. You don't have to be doing anything in this area, except if you have any extra coins, maybe offloading them just in case there's this macro crash. And of course, we saw the opposite play out here, right, where it was a pump up, and it came back to retest the breakout essentially, but it retested it on a cross, right? It didn't retest it on the diagonal down, it retested on the cross up. And so while, others, may have been waiting for a certain price, of course, the smart money bought in on this diagonal. So of course, I'm telling you how I established this diagonal and why I ignored this. And then I'm also telling you to establish this diagonal because it can be very important for buying back in case in case a market does go up. And also you want to ignore this thing unless you happen to be fortunate enough to buy in there. And you ignore this unless you were fortunate enough to buy in there because that's not important for your diagonal. What I'm focusing on right now are these wedges. That's the lesson. So fast forward, our current price action has been extremely confusing for the market. And one of the reasons it's been so confusing is that we didn't have a blow off top this time, right? We didn't have a blow off top. And what we had is actually this kind of diagonal that went sideways and effectively double topped over here. And so if you're using that wedge strategy, you're gonna, because the market is learning, retail is learning, then you might draw this line just like I taught you to draw. And then you might draw this line just like you might think is very clever. And you might think the apex of this triangle is over here somewhere in 2023. And then you might be thinking, okay, you know, we have, possibly another wave to go. And then maybe we're going to chop and then probably do something like this, possibly something like this. But, by the time we get to like 2023, probably it's going to be up. Probably it's going to be time for going up, right? Now, what I would like to propose is that this is kind of a manipulation. This is a possible manipulation. I'm not saying for sure it's a manipulation. I'm just saying it's a possible manipulation. Because the way that I see it, again, trying to break these rules intentionally, because I think these market makers try to break the rules, is that what we are actually seeing is a delayed blow off top, which was added to this second one, basically our double top, as a way to fool the market. Like this was an uptrend, right? Like this price action was higher than this price action. So it was an uptrend. And that's why everyone thought we were going to go to $100,000. They thought that, we had the correction and we were going to go for it now. But if you look at it in a different way, if you just think of it outside of the box, these market makers, they just delayed the blow off top. And so if we do have a blow off top and we measure from the very top and we use this bottom diagonal that I taught you to draw, then what we're going to find is an apex right here. And that's not the most important thing because I told you I don't consider the blow off tops. I consider the price action that supports it. And so I would put a line right here. And then, you still would fall into that trap where you're getting into this extended triangle. See, this is the joke on you, right? This is how they're trying to get you. They're saying, "Oh, these guys, some of them are learning from these past eras. So let's make it as complicated as possible for the next one." And what I would say is that, again, this is the joke. In reality, just like I would have ignored the price action here, you should, this is a delay of this. And so it's sort of like if somebody had just moved this one and put it here. Like the way that you drew this triangle, how you could visualize it might change. I think you guys get what I'm saying, which is that instead of ignoring this price action, which didn't even exist, but just making a hypothetical, instead of ignoring this type of price action, I'm going to be ignoring this type of price action. And then we can really see a second attempt to trick us because you have this fake out and you have this fake out. And so they keep trying to fake you out, right? They keep trying to fake you out. But it doesn't even matter. It doesn't even matter because this price action also brings us to a very similar area. This price action brings us to a very similar area. As long as we ignore this and as long as we're not measuring from here. As long as you're using this concept that I've made with you, then you can very easily see what the actual true wedge is. Right? The wedge is not this. The wedge is this, or alternatively, it's this. Okay? It's one of these. It doesn't really matter. It's one of them. Okay? They both lead to the same point because they can't get away from the real price action. All of the math involved requires the real price action to be considered. And this Oops. And this is just the fake out, I believe. I believe. This is just the fake out, okay? Even if you ignore the very top, this is the fake out, the fake out. They want people to believe, that this is some kind of upward, some kind of upward wedge or something. Let's see, how do I move this one? They want you to think that there's this kind of channel here, which can be extended forward, and that everybody can get kind of excited about the possibility of this, trading this channel. And so you'll hear many people thinking that we could go to 80,000, that we could go to 75,000, depending on how they drew this line. That at least we could go to like this $50,000 or $60,000 because they're drawing these horizontal lines. I mean, they're drawing these like connections, these wedge connections up here because they're starting from this base. They're starting from this base and they're trying to interact with the top of this one. And what I'm saying is that there's a high probability that that's not actually the wedge that we're working on. That most likely we're working on this one, where you totally ignore this price action and this price action, which is just a fake out. It's almost like this is a ghost blow off top. And so there's like these weird like ghost patterns here, right? And it's just to fool you to make this line. They want you to make that line so that you think the next move up is to that line. Just repeating it in multiple ways just in case someone's a little bit confused. But what we can see is that there's either a wedge here or here or here. And we're not going to make the mistake of drawing this one. We're not going to make the mistake of drawing this one. Other people might, but we're just going to do risk management and just assume that this is what we're working with. And so this extension, yeah, it might end up being true. Who knows? Maybe it's going to be true for future price action also. Let's say that we took a big dip, right? Let's say that we took a big dip and found our way, back up here. Maybe that does end up playing out something like that. Maybe this big wedge really is important. And maybe it's even more vertical than we thought, right? Maybe it's this kind of thing and just goes for a long time, right? Who knows? Who knows? And so maybe it's something like this, you know? And it takes years for Bitcoin to do something. But I think this is all a distraction. And I think we can just delete this and delete this and just understand that we have this wedge with kind of a ghost blow off top pattern on top of it. That's kind of giving us fake outs depending on how we measure things, right? Everyone was super bullish right there. Everyone was super bullish right there. Everyone was super bullish right here. They thought we'd get the blow off top. They thought we'd go to 100K, and they thought that we'd go to 50 to 70K. All right? You heard all of those moon boys saying those things. None of it has worked out. None of it has worked out. They've all been tricked by this, by this, by this. They were tricked. So let's just take this for what it is and just assume that just for the conservative purposes, we're doing a repeat of this kind of price action, and that we just had a delayed blow off top. Okay, we had this right here, but this is still the same construct as this. Well, what are we seeing? On the volatility, we're seeing maximum volatility starting to build up. Maximum volatility here. And that could indicate that a very powerful move is about to come. Now, whether it's to the upside or the downside, we don't know. We're going to have to find out. This was to the upside, this was to the downside. Could be either. But if you're in a position right now, you better have tight stop loss and losses, and you better have ability to sell on exchanges that have high liquidity. If you're in a bunch of KUCOINs that have very low liquidity on obscure exchanges, or if your coins are in MetaMask, there's no way that you can sell them fast enough to avoid the consequence of this drop. If we have a drop like this. So if you are going to be in coins, be on very reliable exchanges, have your stop losses already in place. Why do I say that? Because oftentimes during crashes, the exchanges go down. They have so many people trying to access them, and maybe there's some shady stuff going on at the exchanges. They shut down. You can't access your funds, you can't access your coins. Somehow the VIPs and the big institutions are always able to sell, but you won't be able to sell. Or the liquidity will be so bad on an exchange because everyone's selling at the same time, nobody wants to buy at that time, that you're not able to get out of your position, and you just ride it all the way to the bottom, and whatever you were in becomes worthless. So if you don't know about those type of concepts, I strongly recommend you double check those things before we reach the apex of this wedge. When is the apex of the wedge? Well, this one is, this is always art, not science, right? So approximately, and again, this is highly approximate. It could be way off. Very hard to say, but approximately, June. And what I would say is that we've already built up the momentum that can carry us there. So if we look at the 5-day, you can see this in even more detail, where you have this extreme volatility on the 5-day right here, the one in red that caused us to dump. You have this extreme it's low volatility, actually, I should say. This extreme low volatility right here, which caused us to pump. And then we're approaching another extreme low volatility zone. How do we know that we're approaching extreme low volatility? You can see this kind of chop down. You can see this kind of maxed out, and then it kind of chops its way down. It can be an ugly pattern, but it eventually chops its way down. And the thing that's starting to give it away is the daily. The daily has us on the floor again. So this is a big move incoming, and that can initiate the rest of the big move. You see here, there was like an early volatility right here, and then see that was June 23rd, and then by 1 month later, you had the extreme volatility on the 5-day chart. So you can kind of get a lead up. Same thing here. When we pumped up, we had on the daily, we had a lead up. And then approximately 1 month later, we had an explosion to the upside. So we're getting that indication right here. If we're not fooled by the geometry of the wedge, if we're not drawing lines like out to here, right? Because we have decided this was a fake out. This is a market maker ploy, and so was this one. So if we're drawing if we're drawing it out here, if we're not drawing it out here, and we're following this trend down, and we're following this trend up, then we can say we're pretty much in that area where the lead up would probably be. And that could mean that it could be any time. It could be any time now. It doesn't have to be the very end of this wedge. And also the wedge can be drawn a little bit off, right? But could we have anywhere between, a week to, a month and a half? Yeah, we have anywhere between a week to a month and a half before this wedge plays out, and it's either validated or invalidated. I'm not making a call here. Right? I'm not making a call. I'm not trying to convince anyone to do anything. I'm just saying be aware that within the next week to the next month and a half, we have a zone that's potentially going to build up huge low volatility, which has in the past corresponded with extremely huge volatile moves, either to the downside or the upside. And you want your plan for both of them. And if for some reason you miss the upside, potentially there could be a retest, right? And if we break to the downside, you're going to want very tight stop losses on highly liquid exchanges. Do not be on illiquid exchanges. Get out of MetaMask, right? Get your stuff on exchanges and set up the automatic, sell orders. And also be careful. There could be fake outs, right? There could be fake outs. We've already seen what fake outs to the upside look like. Fake out, fake out. But don't forget, there can be fake outs to the bottom side, right? Like right here and right here. There could be another bigger one, and it could be like that, something like that. And you sell everything, and then you miss the move up because you didn't have a plan for up. So don't be a doom boy, don't be a moon boy. Have both plans in order just in case. And then what's this green line? Well, the green line was the best time to buy in after the move, right? And so there was another area of low volatility right here and right here, which could have just been a buy zone. And then after this pop-up, there was another area of low volatility, right, corresponding to a pullback. And you could have bought in there. Let's see if the 5-day has it. Yeah, it's on the 5-day even more clear. And so whenever we pop up or pop down, probably there's going to be a point where we get another signal which says you can buy now if you haven't yet. Either on a pullback or on an absolute bottom or almost absolute bottom. And so this is the signal that I'm going to be looking for. If we crash down, I'm going to be looking for a second signal to give me the okay to buy. And I'll use other judgment as well, but I'll be also looking for this signal. And if we break up, I'm going to try to get into something and have tight stop losses in case it's a fake out and we crash back down. But I'm going to try to get into some things, and then I will look for a signal that we've, you know, that we're doing a pullback. And when we find support on that pullback, then I'll load up with whatever I forgot to buy, right? Or whatever looks like a better value. Maybe reshuffle whatever I'm in. So you can have a plan for the upside and for the downside. What are these yellow lines? They correspond to other areas of low volatility. And by the way, big shout out and thanks to Crown's Crypto Cave for pointing out these patterns. These are not patterns. The 5-day volatility is not a pattern that I derived. That's a pattern that, to my knowledge, that he derived exclusively. However, I am using it in combination with these wedges, and that's something that I'm imagining on my own. And then also the concept of ignoring the blow off top and applying that logic to our current price action in order to derive our current wedge is also exclusively my concept. And that's what it should be, in this industry. We should be using each other's ideas, giving credit to them, when somebody shares their idea. And if it's something good that can perhaps revolutionize how other people think about it, and then we should add our own spin to it in hopes of improving it. Because if I didn't add my idea to it, a lot of people who just think about wedges, they might be drawing this right now, right? Wedge people might be drawing this, and they might be thinking, yeah, there's going to be another bull run. And then maybe we break down, and then maybe we go like crazy. And they might be faked out by this, and I may be wrong. My wedge may be invalidated, and maybe this longer wedge is playing out, and maybe this concept shouldn't be applied, right? And maybe this was the top that we tagged, and we're going to tag it again because we haven't fulfilled this longer wedge yet. It's possible, but wouldn't you rather be prepared for this smaller wedge? Wouldn't you rather be prepared for this smaller wedge since the end of it is coming up? I'm not trying to scare anybody. I'm saying that there's two scenarios. One's to the upside and one's to the downside. And I just want to be prepared for both of them. And that, in my opinion, based upon macroeconomics, based upon interest rates in the US, and based upon how Bitcoin and crypto are basically being traded as tech meme stocks, following the stock market. And so based upon how the stock market is trading right now, I would just suggest that everything leans to the downside. And when you add that volatility in, and you consider that this was probably a fake out to make you not realize that this pattern was repeating, it just makes me think those market makers can be pretty sneaky sometimes. And they may have just set up a couple of fake outs just to throw you off their trail, just to make you think that we're in this rising channel that you could trade up to heaven, when in reality they may want to just send it to hell. And this would be a good year to do it. This would be a good year for them to do it. Just buy back in at the bottom. And then while the rest of the world is in a recession, right, at the end of the year, perhaps, maybe even next year, who knows? When the rest of the world is fighting, recessions, these fat cat billionaires, market makers, and the smart money, they're just sitting in their coins, rising in value, while everyone else is in a recession. If you were smart money, wouldn't you play it this way? Or would you come up to here and then crash down and have an extended, have an extended recovery? Wouldn't you rather just buy at an absolute bottom and just sit back watching everything, get gains just like this? This is just the shakeout. This is to shake you out of the market. This is to get rid of the rest of you. And this is to buy back in. For them to buy back in while you're freaking out. And then they ride it. And then they ride it until they shake you out again, right? These institutions and big players, they don't want to trade the chop. They're not day traders with billions of dollars. Who's day trading with billions of dollars? They want to buy in low and just ride it. That's all they want, is to buy in low and ride it. And to buy in low, they have to shake you out. So that's my theory of what's going on right now. Everyone should have kind of a trading theory about what they think might be happening and what could happen in the world so that they can prepare themselves for the next moves. And if you're someone who's looking at this, thinking that the next move can only be to come back up here, you might be missing the possibility that it could also be to come down here so that those billionaires can ride it out. All right, guys, that was your alpha for the day. Stay safe and happy trading.